Hi everyone, this is a technical analysis on USDCAD. Let's start with some fundamental background first. The US CPI missed expectations across the board, and this led to a sizable depreciation in the US dollar as the market cheered the lower core inflation readings and expected the Fed to be done soon with its tightening cycle. In fact, the market priced out the chances of more than one rate hike, but kept the July increase as a done deal. This may be due to the tight labor market, as we have also seen with the US jobless claims yesterday, and the lack of hints to a skip or pause from the Fed speakers after the CPI release. The Bank of Canada, on the other hand, hiked rates by 25 bps as expected, as the inflation rate continues to be high, especially the underlying inflation, and the jobs market remains tight. The BOC Governor Macklem said that the Bank of Canada is prepared to raise rates further, as if they don't do enough now, they will likely have to do even more later. On the daily chart, we can see that after the first fake out below the key 132.25 support, the price has broken lower again following the missing US CPI report and the rate hike by the BOC. The 130 handle is now in sight and the sellers don't have strong barriers until then. The moving averages have again crossed to the downside as the downtrend resumed. On the 4-hour chart, we can see that the correction after the fake out ended at the 50% Fibonacci retracement level near the 134 handle. Since then, the price started to trend lower as the US NFP missed expectations and then broke below the bearish flag to eventually sell off after the miss in the US CPI report. On the 1-hour chart, we can see that we have a good resistance zone near the 131.35 level, where we have the confluence of the 38.2% Fibonacci retracement level, the moving average, and the trend line. The sellers should step in here with a defined risk above the trend line and target the 130 handle. The buyers, on the other hand, will want to see the price breaking higher to pile in and target the 132.25 resistance. Today, we have the University of Michigan Consumer Sentiment Report. The market is likely to move only if there are big deviations from the expected figures, and it's likely to be particularly focused on the inflation expectations data.